Definitely there's a lot of money flowing into green assets. So there are quite some asset managers who are actually struggling to find enough supply for basically the new green mandates that they are receiving. It will be interesting to see how the German deal goes. I mean, it's a new concept with this twin bond concept. And at the same time, it is a German bond, which is, of course, offering the lowest yield here in Europe. And so we need to see how the investor appetite is for the super core negative yields that Germany will be offering. But at least there will be one willing buyer, that's for sure. The ECB, which is also, or actually has said yesterday with Mrs. Schnabel again, that they are keen to increase their green footprint, but also there are a lot of ALM and other mandates that are, of course, looking for duration, that are also looking for core assets. And there's very limited supply, in particular, due to the way they will launch this new deal. So therefore, I think there will be a scarcity value, and there's also some protection that the green premium will not turn negative. So therefore, in the end, I think the prospects do look quite good.
And in terms of negative rates, I'm sitting here looking at the board here with the 10-year Bund trading at negative 0.386%. Where do you see Bunds trading at the end of the year?
Well, our forecast is minus 0.4, so not very far from where we are right now. But having said this, any increases in yields below this level of minus 40, say towards the minus 30 or minus 20 level, I think will be a better buying opportunity or opportunity to add duration.
One of the main topics of conversation across different asset classes over the last several weeks has been the dollar weakness that we've seen. Just this morning, we're seeing further weakness in the dollar versus the euro. What's going to be the main driver of that trade moving forward in your view? On the one hand, we've got the European recovery story that has been supporting the euro, but on the other hand, we've got a lot of downward pressure on the dollar.
Yeah, there are various factors. One is, of course, the euro-specific story, but probably more relevant, the dollar weakness that we're getting. We have the US election, of course, coming up. And now we have the new Fed strategy, where they are almost desperately trying to push up inflation or inflation expectations. And so this is putting additional pressure on the dollar. So we're looking for euro-dollar above the 120 level for the rest of this year.